What's going on, guys? It's Lewis here with Crypto Elite. Today's date is Tuesday, April 26th. It's about 2:20 p.m. or it is 2:20 p.m. And we have another market update. Sorry that this one is one day late, but I was doing a lot of research and things are not looking really good. I also wanted to see like what some other people were thinking of the markets. So I looked at a couple other videos just to, get some other perspectives. And yeah, they do not think that the market is looking too hot either. So I'll just go over a few things that I've learned or that these people said, which is basically that one of them just wants to drive it through the floor and get it over with. The price action is garbage on pretty much every single time frame, from the hourly to the weekly. Everything from the RSI perspective says that the bears are in control. A failed breakout and a failed retest of 42K equals the bears are in control. Ethereum looks also absolutely horrendous. Every time frame is pretty much bearish. 3,200 should be the yearly high. The guy who I watched thought that 30K would break or is going to break this year. I do agree with him, and that's why I keep on saying that Bitcoin at 26K is going to be my buy. When we are ranging, one of the best things to do is to chart the range highs and the range lows, and then either long a breakout or short a breakout, because the majority of time in these conditions that we're having right now, the breakouts and breakdowns are fake. So it's good to fade them. And then another thing that I learned was another tip is basically just like don't get caught up in the trap of over analyzing price action once you put on a trade. If you're in the green and then you see your P&L dwindling, usually it's better to just keep your trade open, because usually whatever the price is doing is just chop between your entry and your take profit. So really the longer term time frames, or the longer the trade is, the more impressed this person it tends to be. Also, I watched someone else's stream who said that instead of, he didn't say this, but basically what I picked up was that instead of 4-hour closes, using the 12-hour closes is probably a better idea. And this is a concept that I just wrote down for me personally, because I always use the 4-hour closes. However, the 4-hour closes have been closing bearish, and it will close bearish for 4 to 12 for literally the 4-hour close, and then the next candle will be just at the same exact price, and then the candle after that will move up. So it'll be bearish and close underneath the support in the liquidity zone for about 4 to 8 hours, maybe even 12 hours before moving back up. So my stop losses are in these liquidity zones, but I usually wait. I usually have a timeout, but because normally it just wicks down and then wicks back up, it's usually fine. However, recently, over the past couple months, it's been coming down, staying down, waiting, 4 hours, 8 hours, 12 hours, and then moving back up, even after a few days. So it just stops everyone out, and then it's so incredibly difficult to trade that, and that's a big reason why personally I've been losing a lot of trades, and that's why I'm 100% and have been 100% de-risking so heavily, lowering my risk per trade from literally 3% to 2% to 1% to 0.5% to 0.25%, 0.25% risk per trade. My position sizes are just going down because it's just, I can't trade this. If it goes up 6% and then drops 8% and then does a BART move and then it doesn't trend, and it's way too difficult to trade. So I'm almost not going to be trading. However, there are a few things I will be trading, and I'm going to be sharing with you what those are in this market update. So some other things that I learned in the second stream that I watched is this guy's also still very bearish, thinks that 36 to 37K will get hit before a larger bounce will play out, and we'll look for low time weaknesses to get into shorts. So really short positions are the preferred positions to get into in this market. Still thinks the highs are in at 46 to 47K. Personally, I think the high, that I'm also with that. So I think that the highs are in at 46 to 47K of this year, if not of, up until November, December. And I also think that the 30K will be broke. So it's very bearish in my eyes as well. 41,500 is the pivot point of the entire move. I've been waiting for 44K to get hit again. I've been really wanting to bounce back up to 44K. I don't know if we're going to get it. I do think that we will still, I still have hope that we'll reach 42 again, but it's dwindling. It's definitely dwindling with this price action. But then again, the price action has been so confusing over the last couple months that it's really hard to tell what's going on. Hence me decreasing the position sizes, decreasing the risk, and really looking at different strategies, and also focusing more on the research side and more on the content side and the educational side as opposed to strict trading. So I'm going to get into that. Actually, I'll just say what that is. Basically, one, I'm really focusing on updating my course and creating the best content possible for my course. So I just finished a 14-step process of how to research cryptocurrencies. So I'm going to be making a lot of videos on that and a lot of videos on different cryptocurrencies, because it's very important to understand what categories each cryptocurrency is in so that you can play the narratives, because that is a huge thing in crypto, is playing the narratives because it's all speculation still at this point. So that's a big thing I'm working on, is updating my course, getting the absolute best. I'm sort of a perfectionist, so making sure that it is incredibly good is super important. And it takes me about 10 hours of research and basically 10 hours of work to create, I don't know, 30 minutes, 1 hour worth of content. So yeah, it's taking me a very long time, but I am working on it. Also, yeah, so going back to this, basically ETH broke the market structure to the downside. He wants to short ETH, would want to short it near 3150, which is the key pivot level, and 24 to 2500 ETH is plausible. Not bullish on the stock market either. There's another thing, not bullish on the stock market. Stock market is pretty bearish. The USD also looks very bullish, so we'll be going into the USD into the dollar, and of course that's not good for crypto at all. So those were just two traders, and also myself. I do agree with that, but those were just two traders. So there are bullish traders out there as well, and people who have bullish outlooks. It's just not me. So now we could go into the market scan. So basically, one, things are not looking good. One thing that I do want to do during this market scan is to identify the trend. Is it in a range, or is it trending downward, or is it trending upward? And what can we look at to determine the range? And we could see, it's very possible that coins or whatever asset you're looking at could range for a very long time. I just saw a video about Amazon, how Amazon ranged for over 2 years. So that was like, you don't know what's going to happen in this market. So if you're not a range trader like myself, like I'm a trend trader, so this range is chopping me up. So I need to think of different ways to make money in this market, which is also going to go down into number 10, which is basically bots. I'm considering starting them up again because they just buy and sell very short moves, which is better for ranges. But anyway, going back to the actual strategy, a good strategy that I've learned is to fade the breakouts with higher confidence trading the bigger overall. Okay, so this is what this means. Fade the breakouts with higher confidence trading the bigger overall trend. So I'll just go into that right now and show you what I am talking about. So pretty much it's like this. This is the S&P 500, right? So you could see that we're clearly in an uptrend. We were in an uptrend, since COVID. And we were uptrending. And now we're finally doing this consolidation period, right? And so what you look at is the overall trend, and actually looking at this, it's not really that good, because I was actually about to say that the overall trend, the big trend is upward. But looking at what the market structure is, you could see that this was the high. This was obviously the clear high, and to the left of it, two to the left, two to the right is lower and lower. So that was the high, and then we had the low. But now this was the low down here. So we have the big high, we have the big low, and now we have the big high again. So this is pretty much a range, but it's also a range that is down, like having a downward momentum. So it really depends on how you look at it, because you could say high, low, lower high, lower low, and then this was a higher low, and now but this higher low right here was actually simply part of this entire range, right? If we do this, and it was a fake breakout. So you would have faded this, and you would have faded it, and you would have taken your profits right around here. So now the only positive thing that I see about this is that if this is actually a range, if we do close down here, or if we do come down here, then obviously you want to fade the breakdowns and move up and then go up. So since this was a high, a low, a lower high, a lower low, that established a downtrend, which means that if we get a break up, a breakout, you want to fade the breakouts, and fading the breakouts, aka shorting the breakouts, should have higher confidence. Like, you should have higher confidence in shorting the breakouts compared to longing the breakdowns. You should, I mean, I'm not saying what you should do or what you shouldn't do. I'm not a financial advisor, but I would long the breakdowns with, let's say, half of my normal position size. I would long the breakdowns with less position size compared to shorting the breakouts. I would short the breakouts with normal position size. Let's say I would risk 1% shorting the breakouts. I would risk 0.5% longing the breakdowns, and I would target a little under the mid-range for longing the breakdowns, while if I'm shorting the breakouts, I would target the previous low. So that's the difference between having more confidence in the trend, in whatever way the trend is going. So right now, this is the weekly trend. So you could see down, up, down, up. So the trend is down because of once this right here was formed, now the trend's down. So now you want to put more emphasis on shorting the pops, and then thinking that it will come down and continue to come down until we reach a level that is a very big, important level, an area of interest, which for me, for the S&P 500 is, or Spider S&P 500 ETF Trust, is $369. Why? Because that is the previous all-time high. And wait, did I? Oh, sorry. I must have done this a little bit wrong. Whoops. I was thinking, like, while I was reading it, like, what the fuck? This was the previous all-time high down here. This was the previous all-time high down here. So it's actually not this level. It's actually even lower than this level, which is down here. However, since we have the exponential moving averages and the actual moving average, this level is more of an important level. This is a very important level. So really, this entire zone, and when you look at it, you have to think of zones. You can't just think of like one like exact price, because that's not really how it works. But the price level to look at, the zone to look at, really, I would say, is right here. This is really the zone to look at, where let's say that I'm shorting the pops, and I'm shorting the pops, or I'm short. Once it reaches, actually, honestly, once it reaches like this area, if it ever reaches this area, I don't want to be shorting the pops. What I would rather do now is I would rather flip my bias long and try to catch wicks, or try to catch falling knives, or just try to long, because at this point, once we get to this point, then it gets to the point where time in the market beats trying to time the market. You know, if we get lucky enough to come down here, and this is not just like, you know, for the S&P 500, this is for any cryptocurrency or any stock or anything like that. Once you get down into what I call this the value zone. This is a value zone for me. So I don't really care too much if it keeps on dropping underneath here. Like obviously I'd be annoyed, but I know in time, it has been proven that averaging down and getting in at good prices tends to outperform most traders and everything like that. So what my strategy basically is that I like to trade the things that are pretty obvious, you know. So when we break market structure, it's like, okay, I definitely want to, you know, start shorting. If we break an upward market structure to the downside, then I want to start shorting. And if we break a downward market structure to the upside, like right here is where we broke it to the upside, now I really want to start longing. So I would definitely want to be longing like here, right? Like right there. And I would just keep on longing, and just continue to long until we had a market structure break like what we had right here. And now I want to keep on shorting until we reach this zone. There's no area of interest for me to switch my bias to take money out of the market necessarily, unless you use Fibonacci's or some other methods, if we are in blue sky territory though. So that's the thing to understand, is like you don't really know when to take profits. Like I'll go to Bitcoin right now. So like Bitcoin, you know, from, I think it was like here, I started, it was from here. Like, okay, we broke the market structure right there, right? And then we came back down. So I wanted to long, because we're in a very big downtrend right here. Finally, we broke the market structure. So now I want to get long. And I just kept on longing until like right around here. And then it's like, oh shit, okay, now we broke the market structure. However, right there, and so I would short up until we reached the area of interest, the value zone that I said, which was right around here, which was the 61.8 of this entire move up, actually, and also the previous support. So I started longing down here, right? And then we came up here, and we came up here, and we came up here. Now this is a little bit different, because this is previous. This has previous, you know, levels of interest, previous high. So this would now be an area of interest to start scaling out, which obviously was a good thing to do, right? You want to scale out here. And then we started coming down. We broke the market structure to the downside, right? So now it's like you want to short until, and this is what actually sort of screwed me, is that this was my area of interest. This was my area of interest from shorting all the way up here. I think right around here is when, you know, I started shorting, short, make so much money. And I was shorting until this point. So what happened was, when we started coming up, I would continue to short, and I would short. But then this right here is this area really screwed me over. And that's where I ended up losing a lot, everything that I made from here downward, shorting from here downward, because this was a market structure break to the upside. And so I was like, okay, we finally got a market structure break to the upside. So now now I want to long. So now I started longing, and I longed down here, hoping for a continuation to the upside, obviously to around, I was hoping to around pretty much back to 47, 48, if not 58. Actually, I was looking for the 61.8 of this move. So 54,000. And then that's where I was going to take my profits. But we're not getting that like at all. Things are just looking so bad. And I'm looking on the weekly right now. There's a terrible candle on the weekly, followed by this candle on the weekly. Things just look so bad. It's terrible. So, oh yeah, and also we broke the previous yearly open and close. So that's why I was like, okay, cool. So there's a lot of things that were looking bullish once we closed up here. And so I was like, okay, getting on the pullback, but obviously that didn't work out. So what I want to do now is really just go over the trend, the range, you know, what's going on. Make sure that I'm continuing to play and have trades that continue with the bigger trend. Also, just the macro outlook is terrible. We talked about the SPY. I'll also look into the dollar. And I'll just do that right now. So yeah, this is the dollar, and you could see the dollar is looking very, very bullish. It's continuing to just absolutely rocket. And as the dollar moves up, Bitcoin moves down. Bitcoin is against the dollar, obviously. So you like, look at this, May 2020, January, February, March. It was really January, February, March 2020. This right here marked the absolute low of Bitcoin. And we went on a rally in cryptocurrencies all the way up to right around March, April, May 2021. Look at this. May 2021, this was the top, the first top of the cryptocurrency market, right? And then we had we fell in June, we fell in July, and then we had like we had that move up to 70K. But then but then obviously we started falling back down in November. So right here, Bitcoin and the US dollar were correlated, but not even here, but like November, starting in November, Bitcoin has been going down while the dollar has been rocketing. So for the most part, as the dollar shoots up, Bitcoin goes down. Same thing with this right here, January 17. So 2017 was a huge bull market for crypto, right? So all the way up until December to January 2018. In January 2018, the bull market ended for crypto. And then all of the sudden, it was really January, February-ish is when it ended. And then all of a sudden there's that bear market in crypto in 2018, 2019, and almost all the way up to mid to late 2020. While the cryptocurrency market was falling, the dollar was rising. So that's not good that the dollar is so strong right now. So yeah, it's not really looking that good. And you could see we're actually this week we are breaking. Oh no, we're not breaking. We're almost at the all-time highs of, not all-time highs, but the March 2020 highs, before the big, value of the dollar started eroding. And to me, it's sort of crazy how the dollar could continue to go up, because like how can the dollar be worth the same that it was in 2017 when inflation is so rampant, Like, it just doesn't seem like it makes that much sense. But regardless, this would actually be this actually would have been a really good counter indicator to the actual crypto markets, looking at it. So where can the dollar go next? Well, there's this big high right here. So I think if the dollar comes up to like these levels, this is when I would really want to get back into crypto. So I'm just gonna say like definitely get back into crypto here if everything is still down. That would be definitely the area to go, because then the dollar will fall, crypto will rise. Who knows what's going to happen, right? But yeah, and then I'm not going to go all the way back to 72, 73, 75. This was in 1985. I don't really care about that. This was in 2001. So the good news is that we're coming into a pretty big resistance on the dollar. So hopefully this will fall and we'll get a bounce in crypto. But the bad news is that it's looking pretty good. So, I'm just going to be playing crypto on the safe side. So there's that. Let's see here. Continue the bigger trend. Macro outlook is terrible. What areas will I look to go into ETH? Okay. Another thing I want to say. So Bitcoin, obviously I've been saying a lot that I'm going to go into Bitcoin once Bitcoin gets to 26,000. That's like my main zone. So let me bring this down here. Actually, wait a minute. I'm going to keep this, but this right here, this chart is good. So this is the yearly open close at 28,939. So that's actually a really big area. But 26 is where I would love love to get in. Anyway, I keep on saying this, but the thing is, I'm not actually going to put most of my stuff into Bitcoin. I'm going to put most of my stuff actually into Ethereum, because Ethereum is going to have the merge, right? It's going to have ETH 2.0 come out supposedly later this year, which is basically like a bunch of halvings to Bitcoin. It's going to, in case you're not aware of what's going to happen with Ethereum, they're burning more Ethereum than is being, I don't know if they're burning more than it's being produced, but they're going to start burning a lot more Ethereum, which means that the supply of Ethereum will be going down, which helps make it more deflationary, or I guess it makes it less inflationary. So Ethereum becoming less inflationary is very good for Ethereum, because typically the less inflationary, the better the price performance. So if Ethereum, I still like this area of 1900-ish. I do like that, but I think correlating the 26K to Ethereum, it'd probably be around 15K. So 1500, which also lines up with the previous all-time highs. So this is pretty good. Can I 1,000, this area down here, like $1,100, $1,200. Yeah, I see it. I could see it happening, sure. But I feel like the value of Ethereum is going to be, it's just so much. I feel like it's worth way more than 1,500, so much so that I would be willing to buy it at 1,500 and just wait it out. If I have to wait 6 months or a year for it to come back up, and then I wait another maybe 2 years for it to get to 10K, that's pretty damn good. So this is probably the area that I would want to go like all into, although I'm definitely going to be stacking a lot, right around this area between 17 and 1800 for sure, 17 and 1900 for sure. So that's Ethereum. All right, so we went through all of those things. So now I'm going to go through my fundamental indicators, how I always do it. And then I'm going to look at each coin individually. I'm going to try to go through as many coins as possible. And because some of them are not correlated anymore. So look, everything's going down, right? Look at ApeCoin. ApeCoin has not been going down. ApeCoin has been going nothing but up, okay? Look at KNC. Nothing but up. Although this is a fairly ridiculously big wick, so maybe it's going to start going down actually. But it really has been nothing but up. This was a very terrible wick right here too. And look at that. Look at what happened. So I wonder what that looked like on the daily. Yeah, I mean, we got a lot of wicks up here on the daily. That was really bad. So this looked like a great shorting opportunity right over here. But what do you know? Nope, sorry, refused. And then same thing with this. Short right here. Nope, sorry, refusal. So yeah, this is in an uptrend. So I'm not like, I don't want to short cryptocurrencies that look like this. Would you ever short a cryptocurrency? Would you ever short something that was going parabolic? It just doesn't. I mean, there are some instances where it makes sense, right? There are definitely instances where it makes sense. But I just feel like so many people are trying to short this and it's just simply not working out. Like, where do you short it? We're in blue sky territory. The time to short it is if we get a break in the market structure, like a break in the market structure. So let's look at the daily and see if we see that. So let's see, start from down here, break in the market structure. Nope, no. This right here was a break in the market structure. So that short would have been obviously bad. And then we had a break in the market structure. So this short would not have worked out either. Let's see. Boom, boom. This is fine. This is fine. Not really any break anymore. No, no, no. This right here was a break. Yeah, this right here was a break in the market structure. So you would have shorted probably somewhere right here with a stop loss right here. That would not have worked out. So yeah, even waiting for the market structure to break, you would have got stopped out every single time. Every single time. So why even try? Why even try? Doesn't it make more sense to just like, I don't know, long, like say the moving average, the exponential moving average, just like put a long position in here. And then if it falls, down here, then short it on a pop-up, or take your profits on the pop-up for like a very low risk trade, or put in a long position right here, because look at this. Every single time so far here, like you could tell, this is what I'm talking about. Boom. Breaks through the previous high, bounces, goes up, bounces, falls down, fakes everyone out, and then shoots up. Okay. Bounces, does not come down to fake anyone out, comes up, breaks through the previous all-time high, comes back down, bounces, comes back up. So the last time it only did it here, and it did it here. So bounce up, bounce back down. Actually, no, it did it here too. Look at this. Previous all-time high. Shit. Look at all this. Look at all of it. Every single time. Every time. So it comes up. Okay. Establishes a nice high, some range, breaks through the high. Okay. You want to get in on the retest? No. Don't get in on the retest. Come back down. Get in at the support? No. Screw that. Get in underneath the support at the liquidity zone right here. Okay. See that? Then you ride it up. And you just don't take your profit, right? You take your profit here, I guess. And then what happens? It comes back up, comes back down. It breaks through the previous high. So what do you want to do? Get in at the SR flip? No. You want to get in underneath the SR flip right here. Liquidity zone shoots up. So previous all-time high right there. You want to get in at the SR flip? No. Get in right underneath the SR flip, okay? Boom. Breaks previous high again. Get in at the SR flip? No, you get in underneath the SR flip right here, which did not get hit, but eventually got hit right here. So this was a breakdown in the market structure. So this is where you would get in. Okay, comes back up. Boom. Breaks the market structure high. Where do you want to get in? Probably right here. You probably would have missed it because this wick wasn't really that low. And then broke here, come back down. This was a good one. This would have been good because you get in right underneath the previous. Yeah, it's literally, it's like underneath. So the best place right now, for KNC, looking at this, is the previous all-time high, low, high, low, high. So here's the high, boom. Yeah, the first place to long would be right around here. But ideally, this right here is a very pivotal zone. Ideally, this is the area. Why? Because price could come back down. Price would come back down, break the market structure, fake everyone out. Everyone sells and all the whales buy, and then it continues the big overarching trend. The overarching trend is obviously up. That's the overarching trend. So it really seems like you want to get in at a very key level. Also, look at this level. This is also basically can it go back anymore? No, it can't really go back anymore. So this is a key freaking level right here. So let me get rid of this. Let me get rid of this. Let me get rid of this. Sorry, one by one. Sort of boring, I know, but yeah, this is a pretty key level. Previous all-time high, break. This is actually what I would do. what I would do is try to get in here. I would try to get in here because this is the previous all-time high, right? At least on the 3-day. I wonder, usually it's the daily that people like the most. So here, do this. Okay, so this is the zone. This is the big zone that everyone's really sort of looking at, and it's also on the weekly. There's going to be a ton of people that have their stops right here. So this is where I would want to buy, is right here. Look at this. This was the previous high. Boom. Thinking of that knowledge, this is where I would want to buy once we broke above. So it's like this. This was the previous high on the weekly, right? Go to the daily. Yeah, look at that. Look at the daily. So we have this high, right? So this was the clear high. This entire range basically was the high. Okay. We broke through that high. So where do you want to get in? You want to get in right underneath that high. Now the same thing happened with this high. Boom, boom, boom. Finally, we broke it. Where do you want to get in? You want to get in right underneath that high. You know what? This obviously doesn't always work, but it definitely seems plausible for something like Kyber network. Or you could simply not trade it. That could be another option too. And that's probably the better option. Just don't fucking trade it. There's no point because it's all a scam and this is all like artificially being pumped anyway. So it might just tank and go to zero. You don't know. You have no idea what's going to happen. But this was just a brief look at the markets and just seeing like what has been happening. So all that I know is that if I'm going to be longing something, like if I'm going to be longing KNC, I want to long it because the overall uptrend since literally January, since January, it has been in an uptrend, consistent uptrend since January. So January, February, March, April, 4 months of uptrend and 4 months of breaking the previous resistance and then falling back down to right below where the previous support resistance level is. Breaking the previous resistance right here, falling back down to right below where it was. Breaking the previous resistance, which is right here, falling back down to where it was below. Breaking this resistance right here, falling back down. Oh, this one did not fall back down to below it. It felt like just below it, but that's not enough for me to really care. What about right here? Yep, broke it, fell back down right here. Boom. And then went back up. So very easy to spot. I mean, it just looks easy to spot for this, right? Now, one other thing though is that I am in a Luna short from like right here. But I still wouldn't even short Luna. Like I think this is a stupid short, and that's why I only have like a few dollars in it. Like I don't really have that much money in it. I would much rather be longing Luna because since June, since June 2021, it's been in an uptrend since June of 2021. Look at the weekly. Like this doesn't look like a chart that I would really want to short, to be honest. Unless you're thinking like, no, you can't even really think that. Like I was going to say head and shoulders, but you can't really think that. Like, yeah, no, I would rather continue to go with the trend. Although now it's looking, this looks a lot like Bitcoin. This looks a lot like Bitcoin 64K and then 69K, doesn't it? So maybe the short actually is a good position here. Yeah, Luna is not as clear cut as KNC was, that's for sure. But one that is pretty clear cut is ApeCoin. So I mean, look at Ape. It's only on the daily, but this is clearly up, followed by a consolidation, followed by a breakout upward, and a continued move upward. That's bullish. Normally, if you get something like this, a move up, followed by consolidation, followed by a move up, and then immediate move back down, I'm getting so like so many lines on the chart. But this right here, this sell-off, this was like really nasty because we broke through the previous, I don't know, it depends where you, it really depends where you put your lines, but let's just say that this line right here, this was like the top, right? Okay, cool. So we finally broke through it, and then we had the previous, I guess you could say we had the SR flip right here. So this would actually be pretty good. I accept that. I like that. And then we had a continuation. So yeah, just looking at it from an actual perspective, we were ranging. And we were ranging and ranging and ranging. We broke out through the range. We retested the support. We retested the resistance as support. And now we moved up. So when's the best place to long? Well, I mean, if you take what we learned from KNC, the best place to long this ApeCoin, if you're gonna do it, which it seems like a good idea, would be somewhere right around $16.50, $16.40. Like I would long ApeCoin at $16.20 to $16.40. I feel like that's a good long, and in expectations that it comes back up. And of course, this region right here, this is where I would absolutely not short it. This is where I would sell everything, because normally things come up here, and I would actually sell it at 26.5 just to be sure. And let me just do this right here, 26.5, boom. 26.497. That makes more sense. Okay, so yeah, 26.495. So that's where I would sell it, right? Because this entire area up here is a sell zone. But like, this isn't a bullish trend. Yeah, there's not that much data on it. We go down into the lower charts, huge consolidation followed by a mover up in a bearish market as it continues moving up. Look at what happened with Link. Okay, you're like, why would I long anything right now? Well, why would you long anything in 2018 or 2019? You wouldn't, except for Link. Look at what Link did. Link went up. Link was made in a bear market February 2019. It was super bearish, but it just kept on going up and it kept on going up all the way up until even all of 2020. 2020 it kept on going up. A lot of coins were not really moving yet. And a lot of coins started moving around September, October 2020. That's when the bull market really started, in my opinion, was around September 2020. And Link had a 800 to 900% gain, while most everything else was stagnant. Okay, so why can't ApeCoin do the same thing? And I'm not talking about 800, 900% gain. I'm talking like 50% gain, but still, you know what I'm talking about? So look at the market structure of the different coins and like long the ones that are doing really well. And then also, instead of trying to short, KNC or even shorting Luna, like how I did with a very short, very small position size, look for coins that like no one really cares about, or that coins that don't have a big following, or coins that just like don't really like that, like don't have a narrative around them, and try to like, I don't know what the hell ALCX is, but like this looks like a great coin to short because it just looks like it's going to zero. Alpha perp, okay, another coin that is just looks like it's going to zero. Oh my god, I wish. Let's see, ARP. I don't know what ARP is, but this looks like a good short because look at that. It had this was the high. This is it. So if it comes back up here, and I'm not saying, and obviously I'm not like, okay, just like, short right now. No, I don't want to do that. What I'm saying is like, find the ranges, plot out the ranges. What the hell? Oh my god, look at what is going on here. This was at $3.20. This went from, this did a what? 3 cents? This did 100x. This did 100x. The Ascent token, the BitMEX token did 100 freaking, holy smokes. I did not know that. From January to March. What? That's crazy. And this is actually this is a great token to it sucks because now we're in this range. That, like, this is, I don't want to play. I don't really like playing like such short. These moves are so little. Like, you know, it's so fucking hard now. And now we're getting things have dropped so much. I think Adam has too much of a following. I feel like Band is a good short. Band would be a good short position. But it's like short the breakouts is the thing to do. Long the breakdowns. So we're in this range, short here, long underneath here, short here, long underneath here, and then take your profits like in the midline, like here. It's possible. BitDAO. What the hell is BitDAO? This is something that I would short. BNT. If BNT comes back up here, perfect shorting opportunity. This is a great shorting opportunity. 25%. That's nice. Brazilian digital token. I have no clue. Absolutely no clue what that is. 1.963, 1.9636. Oh, I must have done this after the fact. Yeah, this would have been a fucking amazing short right here. This was the shorting opportunity. Coins like this is what I would want to short. I would love to be able to, like, but the thing is, like, I'm gonna have to wait. Like, I'm gonna wait. Like, I'm not gonna try to force positions. I don't want to force any more positions. Like, I'm tired of forcing positions. This right here is a clear, actually this entire zone right here is a clear one. So shorting pretty much anywhere in this zone is good. And obviously that would have been really good. 16%. CeeLo. But then you get these scam wicks, you know, these 50%, 60% scam wicks, which is basically like sucking the liquidity out of all the shorts, which is why it's like, the position sizes need to be low. You just can't have huge position sizes. Dent. Remember Dent? Anyway, I'm going to go through all of these. After I go through the fundamental stuff. So let me go through the fundamental stuff and plot out some more levels, and then I will go through all of these. And yeah, we could do that. All right. Okay. So now let's get into the fundamental indicators, and then we will go into the analysis of all the different coins and also some on-chain data and other things like that. Starting off, we have the CBBI Crypto Bull Run Index. It's at 33 right now. You know, smack dab in the middle, not necessarily in the middle, but with this one, I wrote it down up here that over 95% or higher is where I want to exit. If it's 20% or lower, then I'll buy it. So 33 doesn't really tell me anything. So I'm going to get rid of that. Then we have the Pi Cycle Top Indicator. Obviously, it's not a top, so we don't need to worry about that. Then we have the MVRVZ score. It's not in the green yet. For this one down here, as soon as it hits 8, then I'll exit half my position, or 8.5, I'll exit the rest. If it hits the green, which is 0, then I'll enter. So yeah, it doesn't tell me anything because it's not in the 0, it's not in the green or above 8. Then we got the R hodl ratio. Same thing for this one, not in the green yet. So I don't want to jump and throw everything in here. I want to wait until it comes down here. Same thing for the, or I guess then we go into the Bitcoin rainbow chart. and we're in the accumulate zone right now, so that's pretty good. It's better than the still cheap territory, which we were in not too long ago. So I do like the accumulate territory, but obviously comes down here. This is where I'm really definitely buying. Totally. And then we have the fear and greed index. Right now it's at 27. Personally, for me, if it's under 15, that's when it constitutes an automatic buy, and over 75 is when it constitutes a sale or scaling out. So 27 doesn't really tell me much. However, we are doing some stuff in the market right now, and so I am longing, but I'm only scalping right now because we had these pretty, like, if you look at these numbers right here, you can see they're pretty big. So when we get really big red days like this, I do like to buy just so I could scalp some. So, I've bought some here, and I want to, scalp for 2%. So I've already taken my profit on a lot of these trades so far, basically, like where I would buy and then just simply take my profit at 2%. So most of them I have. Cake I haven't yet. There's a couple of them that I haven't, but yeah, for the most part, that's what I'm doing. And I'm just scalping these very quickly to get at least a little bit of profits in the books. So we have all of that. And then the next thing that I like to do is I like to go and look at the Glassnode YouTube page, which is this one right over here. And I'll see if they have a new video, and if anything is, I guess important or something that I find very good. And so they have the week on chain, the rise of perpetual swaps. So I'm going to watch this, and I'm going to let you know what it is, if there's anything that I find interesting in it. Okay, so the first thing is that the perpetual futures and the derivatives are just much higher than where they've ever been. However, the actual amount of capital that's in there is not as high. So what that means is that before it was usually a lot of just spot trading, but now derivative trading has totally surpassed that by leaps and bounds. However, you'll see that back here, there were the funding rates, like basically when you would long something or when you would short something, you would get paid to do that. And so this is very attractive to traders, because if you could just put on a position and pretty much get paid to be in that position, then you're, of course, that's going to attract a lot of people into it. However, what you see is that the funding rates continue to go down and down and down and down. And now the funding rate is like hardly anything, right? So because the funding rate is so little, basic and regular inflation is like 8%, right? Or more, really, to be honest. That decentivizes people. Like, why would capital be flowing into the market, or why would people be putting on trades if they are not going to outperform inflation? And so, like, back here, of course, they were going to put on trades, or they were going to put money into the market because they would, outperform everything. But right now, there's so little interest that the interest rates that people get are so small that it's just like people don't really care. So I guess what this is really saying is that things are pretty boring. Things are much more fundamentally based now. The cool thing is that there is still some capital in the system, which is nice, unlike, 2018, where literally all of the liquidity just left. But there is still some right now, which is nice, although we obviously, that could just as well leave, and we could, fall back down. So nothing's certain, but pretty much everything's really boring, and people are leaving crypto, and everything is going back to the fundamentals, which is, exactly what happened basically on a fundamental level in 2018, 2019. So, this is the time to really do your due diligence and look into projects and think about the strategy that you're going to use and figure things out. So yeah, with all of that, I think we can go on to the next part of the analysis, which is going over the crypto market capitalization, along with the pretty much. There's one more thing that I wanted to say, though, before I actually get into that, which is the altcoin season index, which is pretty cool. Maybe I could do this right here. Yeah, there you go. And this is nice. So Bitcoin season is down here. Altcoin season is up here. So if altcoins, if altcoin season does come down here, that is a pretty good area to actually, you know what? I was gonna say this should be a good area to get into alts. However, clearly it has not been, because this alts have not done very well since April. So you know what? Scratch this. I will have to do a lot more back testing on this, because the last time that it did well was maybe January-ish. And yeah, didn't alts start going up and have that rally in March, which was this right here? So actually, you know what? Scratch this. This was a brand new thing that I just saw that I thought would be pretty cool to use. But yeah, thinking about this or looking at this now, I don't really like it. But I'll keep it in the back burner. So I'm just gonna get rid of this, and we're gonna go straight into the total supply. So this is the last thing that I wrote down, or the last basically thing that I published. Basically 61.8 is right here, so it's a pretty good, decent area to long. However, I would probably want to wait until, like, if I really want to wait until the best possible area, it would be 1.52. I guess we got down to the 78 or the 88, and then we're starting to bounce up. Okay, so we're at the 78 right now, and yeah, so that's why I'm still scalping. I'm only going to be scalping. I'm not planning on, you know, doing anything crazy until we really get down into here. I want to try to preserve my capital as much as possible. However, if we get in, I do think, you know, if we get to 1.62, this could be a pretty decent area to long. So what I'm going to do is I'm actually going to pull up TradingView, and I'm going to use the actual TradingView charts to do some analysis, and I will be right back. All right, so I think it's time that we actually get into the charts. So I'm going to start off with the crypto total market cap. You can see that we just broke down below the 61.8, which is never a good thing. So my next target is either going to be, like I just mentioned, the 1.62 or the 1.52. And honestly, I feel like I'll do some scalping around the 1.62 region. However, the 1.52 is where I would much rather just go into, you know, cryptocurrencies at the 1.52. So yeah, I'm going to wait for this. And then of course, the best buy zone is 1.227, because that's the 61.8 of the entire move up. But if we enter like, I don't think under 1 trillion, I don't think we're going to go under 1 trillion, but the 78.6 is at just about 800 billion, and that's also the yearly open. So that is a fairly significant level. So I would really hope that if we do come down to this level will hold. And I think that it can. I think that it can hold. If it breaks, that would be terrifying, because really this is the next level, is $800 billion. And you really think, I don't know, I just can't imagine all of cryptocurrency going down all the way down to so that it's only $800 billion. That's like nothing. So this, I'm going to go very, very, very heavy in right around here. Definitely at 1.22 trillion, but I'll try to snag some up at 1.52 before then. And yeah, because that's definitely something to do. And I would definitely do some scalping at around 1.62. So yeah. All right, so basically right now I'm doing some very, very, very tight scalping, like 2 to 3%, maybe 4% take profits. If it comes down here, I'll scalp for maybe 4 to 6%. If it comes down here, I'll do some short-term swing trading, maybe 4, 7, 10%, a little bit more than that. And then if it comes down here, I want to go in super, super heavy, do some longer term swing trading. So that's going to be the total market cap for all of cryptocurrency. Now we have the total 2. And last time, let's see what I said for total 2. It was Basically the same thing. Right now it's at the 61.8, so it might be okay time to buy. And I did buy yesterday, but confidence is pretty low. I'm in my position, so we'll see what happens. But I think that I will stick to only trading once price reaches my big areas of interest. So yeah, so that was the 61.8 back here. I entered a couple trades. We got the wick down and the wick back up, so I was able to exit some of my positions. But overall, I really want to wait until we get to those big areas of interest. So right here, $878 billion for the total two is where I really want to go in heavy. Well, not necessarily super heavy, but it's where I want to do some short-term swing trading. So I'll, put that in here. Swing trading, right? If it comes down to this area, same thing with the type of scalping here. So this is where I will scalp. If it comes down to around the $935 billion area. And then if it comes back down to the golden fib, which is 663 billion, that's where I would go pretty heavy and try to long a whole bunch of alts. So basically the same thing for alts then as it was for the total market cap. Okay, moving on to dominance levels, we have altcoin dominance. Basically, we were trending down with altcoin dominance and the market was going down. And even when altcoin dominance was moving up, the market did move up a little bit in March. However, we've been moving sideways in April and mostly down in the actual alts, even though we're going sideways in the dominance levels. So really, it looks almost like we're in this whole entire zone, right? This big zone right here is like where we're in, right? And if we condense it down, we could condense it into this zone. And honestly, the dominance levels, I really want it to come down to here. This is where I would really want to be longing alts. If we could get the alt dominance level to come down to 55% while the total two comes down to, $878 billion or even $663 billion at the same time, like that hits that and this hits, excuse me, what the freak is going on here? And this hits this area, that would be such a good combination that I would definitely want to long. But right now it's in no man's land, so can't really use this for any type of real analysis. Looking at the market cap for ETH specifically, like just ETH, you can see that it had, if you take the high to over here, we did get the bounce from this line, which is why I think it's very significant, plus the rejection to rejection. And then finally, a little bit of rejection followed by some support, but not really. And now we fell below it. That is not good for ETH. And so I would very much like to short ETH and sell all of my alts if ETH ever does get a pop back up to $350 billion, which probably is around 3,200 if I want to say. So hopefully maybe 3,400. We'll get into that when we actually look at Ethereum. But yeah, when it comes to the ETH market cap chart, I really want to get out if it comes back up here, because this is a big resistance. And not only is it diagonal like that, but if we go like this, plot this out. Well, I don't know why this is green. Hold on a second. Do this here, style, make it white, make it make it a little bit thicker, and there you go. So now we have this right here, and this was a huge resistance right now, right up here, but this was horizontal, and yeah, horizontal is actually more important than vertical, but this is actually more important. Right here, this level is more important because this is both the diagonal and the horizontal at the same time. So Ethereum is going to have a lot of trouble breaking this area right here. Not to mention, this looks awfully like a bear flag right here. So like down and then bear flag and then break to the downside. I could totally see that happening. So yeah, I am not confident in Ethereum at all. I bought some right now for a little bit of a bounce, and we come back down a little bit, maybe we'll bounce back up to here, but no, definitely not good for ETH. And maybe going on to BLX. This is just the big thing. BLX, yeah, you could see BLX long-term chart pretty much from the previous highs to here, to here, to here, to here. This has been pretty significant in terms of support support. Super annoying, very annoying how we did not get down here on this wick right here. But you know what? It is what it is. Maybe we'll come down here and reach around 32 to 33,000 again and bounce from there. This chart it's nice, but it's also like not the best chart in my opinion. You could also say that this is really big, the weekly 200 EMAs, okay, and the horizontal support right there. So confluence all around between 27 and 33, which is quite a big range, quite a wide range. But we'll see what else happens, because this is a long-term chart, weekly chart. So we need to really look into it on a more micro perspective to really get a good picture. Okay, so moving on to the actual charts, we could look at Bitcoin, and this is doom and gloom, to say the least. But yeah, so every single time that there's been a bear market, Bitcoin has dropped 80% or more. So a drop to 80% from the top, it is roughly around $13,000 to $14,000. And that happens to line up with the yearly open and close, which also happens to line up with the previous all-time high, and not the 20K obviously, but if we scroll back here, this whole area right here of 13K was such a big resistance that it was really tough to get through. Do I think that we're gonna get there? I don't. I really don't. I just don't think we're gonna get there, and it doesn't even matter if we do get there, because I'm gonna be all in by 26K, right in between, or maybe right at or right in between the 200 weekly and moving average and 200 weekly exponential moving average, because this to me is a fair value for Bitcoin. Anything under 27, 28 is a steal. So that's why I'm going to be buying it there. And if it happens to drop, literally it could drop another 30, 40%, 45%. I'll be totally fine. I don't care. That's like me saying, oh, I buy it at $8,000. I bought it at $8,000 and it dropped down to $4,000. Would you be mad that you bought it at $8,000, when it went to 60K plus? Like, no, you can't. So I'm going to be happy at 26K. The thing is, though, I keep on saying this. I'm going to buy at 26K. I'm going to buy at 26K. But the thing is, I'm actually going to buy a lot more Ethereum than I'm going to buy Bitcoin. And that is because Ethereum has so much potential for growth in terms of news catalysts, because it's coming out with ETH 2.0. It's coming out with the merge. It's going to be burning Ethereum. And I already explained this in the beginning of this video, so I'm not even going to explain it anymore. So yeah, I'll be buying Ethereum, and I'll be plotting those out and charting everything out. So, but looking at Bitcoin for the time being, start off on the weekly, see what has happened. So this is what has happened. We have 5 more days to come back up and close above 40K, or above, basically close above 40K. Otherwise, this is really, really bad, because this is a bad candle already, and then this is a confirmation candle on the weekly, which most likely means we're going to be seeing a lot more downside if this closes like this. I don't think it will. I think we're going to get a bounce. I'm honestly, I'm legit still hoping we get a bounce up to 44K. Like, I know 15% is sort of a lot to ask for, but I am still, 17%, but I'm still holding out for it. I'm still holding out for 44K. I'm not going to Goblin Town just yet. So if Bitcoin reaches 44K, I'm selling everything. If Ethereum reaches 30, honestly, I feel like if it reaches 31 again, I should sell everything. And that is 12%. So Ethereum, maybe if Ethereum comes up to 31, I'll sell everything. And if it does that before Bitcoin goes up to 44, which is it's a lot more probable that will happen. So let me just look at Bitcoin a little bit more in depth, and I will be right back. Okay, guys, so I actually just did something where I inverted the colors of the candlesticks. So now red is up and green is down. And I think that this makes things a lot easier mentally and emotionally to handle and to understand, because we're clearly in a downtrend, right? And everything looks absolutely horrible, and we're probably going to go much lower. So I want to be short bias. So what makes it so much easier to be short bias is when you have the candles like how I have them right here. Green is down, red is up, because it's like, oh shit, it's going up. You want to sell, panic. And if it's going down, it's like, okay, cool. Now there might be a buying opportunity if you get in on the big green candles. So I changed my candlesticks to this, and pretty much Bitcoin, this is what I want. I want 37,000 Bitcoin to be reached so that we could come down here, smack it. I'm sure there's going to be a lot of people that are going to be buying at 37,000. So maybe 36,700 would be a great time to buy. So $36,700 is a great buying opportunity to lock in maybe 5% on a bunch of different alts. And then finally, of course, we have 34,000 at the range low, which is also another good buying opportunity. Let me see if I have this. Okay, so this chart right here. So this was the liquidity zone number 1. So we tapped that, bounced up, tapped it again, bounced up, fell through it. So now there's no liquidity. So this basically, people longed here and then they put their stops here, and we bounced up, boom. And then the market makers tapped the liquidity, soaked it all up, and then shot the price up. Then it came back down, tapped the liquidity, soaked it all up, shot the price up. And now there's no more liquidity down here. So they go back down. So they're going back down. So now the thing to do is look to where the next liquidity zone is. And it looks to me like the next liquidity zone is right here. So 36,200. So this is where I would want to buy. So buying here. So this is where I'm buying, basically 36,200. So let me do that. I'm going to buy here because this is the liquidity zone for this, for all of the traders that are going to buy 37,000. So because they're going to buy that, that's what I'm going to do. I'm going to sell there. I mean, since they're going to sell here, I'm going to buy here, because so far I've just been trying to regularly buy and sell and stuff. Has not been working out. But this is a new tactic that I'm going to be doing, that I'm going to be implementing, where I'm buying the liquidity zones. And I'm only going to be scalping for a quick 5%. Yeah, and I'm only going to be scalping. So my goal is to buy here and then basically not even 5%, 4%. Sell, the bounce, and then wait for another liquidity zone. So the next liquidity zone is going to be down there. So this is 1, 2. This will be 3. Actually, this whole area, there's not enough here. Like these wicks right here, it's not enough. This down here is definitely enough. I like this $30,000 area. This is definitely enough. And yeah, I guess the liquidity zone for this is 29 to 28,000. But I'm pretty sure we'll get a bounce from this area. So I'll be buying down over here for sure. And yeah, that's going to be Bitcoin. That's definitely going to be Bitcoin. Buying here for a quick 4%, and then I'm going to sell everything and then buy here. Otherwise, where am I going to look for a short position? So my short position is absolutely going to be like 43,890, like maybe a little bit lower. Like I'll have my short position here, 43,000. I was going to have it before, it was 44. But now it's 43 because really this entire zone, this entire zone is a short zone for sure. So I'll do this. Selling / shorting zone right there. So yeah, that's the game plan for BTC, is selling any rallies up into 43,000 for sure. All right, so now we can move on to Ethereum. Ethereum has essentially been in a sideways market since literally March 2021. I mean, yeah, obviously we had a huge rally, but since we came all the way back down and then, went sideways, we were sideways from January till now, 4 months. We were sideways from March to up here to down, all the way back down, all the way back up, and then down. Yeah, like a fake breakout and then all the way back down. So we've been like sideways for quite a while now. I really I don't think we're going to get up to 3,800. I don't really see it. I like how we have a higher lows, and we got a higher high, which is cool. Maybe we'll make a higher low again, but I don't know. I'm just not really counting on it. I'm really counting on a sweep and coming back down to the 1,800 area where I want to really just buy most of my Ethereum back. And so I'm going to wait here. I'm waiting it out here. I mean, that's where I wanted to buy originally. And then we had all of this chop, which like totally screwed me over. So I am still waiting, and you could almost say like one. Now I was going to say you could count this as 1, 2, 3, and then three coming down. Maybe on the monthly, you could say 1, 2, and now we're on our way back down for 3. And then who knows what we're going to do, 4, 5. I don't think that really counts, because this would have to be, hold on a second. If this was the top, yeah, no, that doesn't matter. That doesn't make, I mean, it makes sense, but it's not what I'm looking at makes sense, but like I wouldn't count on it. Although look at the monthly chart. Look at the monthly chart for Ethereum. Like what happens? Like, is this real? Like what the, no, this is it down here. $500. It does line up with the negative 61.8. That's very accurate. That's sort of scary. That's a little scary. Oh, wait a minute. Hold on a second. Is this the top? Yeah, that is the top. Oh my gosh. Okay, so Ethereum, it's so bad. We just broke through the 61.8. So basically we had the pop up here, came down to 38.2, a tiny little jump, came down, chopped, smacked the 61.8, jumped up to 38.2, which happens all the time. And everyone took their profits. And then we smacked back down, consolidated around the 61.8, had a fake breakup, and then we broke down, and now we're down here. So I don't even know if we're going to reach 3150 at this point again. That would be, it's like, I want to long at 2,400, or I want to sell at like 3,150, like basically here. I just don't see it even going back up there. I just don't, like, I see it coming up to maybe 2,900, falling back down to 2,700. Like, this looks so bad. It just looks so bad. It's really hard to justify owning anything right now. I honestly want to just sell everything. Like, because I've been waiting for bounces, like waiting for a bounce on like a lot of alts. Like it just nothing ever happens. So I am very short, very biased that to be short right now. You could see the 200 EMA was a little bit of a resistance here, along with here, and here. So this area is like huge resistance. Damn, I don't even see 3,000. This is a tough one. Okay, so after looking at it for a lot longer, I came up with my game plan, and my game plan is to pretty much sell off mostly all of my alts if Ethereum comes back up to $3,000. Why is this? It's because if this was the bottom right here and this was the top right here, then you could take the Fibonacci from the bottom to the top, target the 61.8, which is obviously 2,700. So I would target 2,700 as my entry price, right? And so I would try to enter here as a short-term long, as not a swing trade, but as just a scalp. So I would try to scalp if it comes here, 3%, 4%. However, I'm holding on to a lot of coins, so I don't want to just sell those coins at a huge loss. So what I would hope for is the bounce from the 61.8 to come all the way back up to just about 3,000. And honestly, I'll just say, it really is 3,037. So I'll just say 2,987, just to make it a little bit lower than what it is, right? So this is going to be my area where I want to sell, because I want to sell before it hits the 38.2, right? And so I would long here for some scalps, and then I would take my profits here on my trades. But on the coins that I'm holding, I would get out of those coins at just under 3,000, which I hope that makes sense. And then I would target to get back into most of my coins when Ethereum comes back down here, if not here, or all the way down at, underneath 2,000. So I'm hoping that ETH does something like this, and then eventually just, falls through and eventually just goes down. Obviously this whole part down here is exaggerated, but I do hope for at least, really hoping for something like this so that I could just get out of my shit, So that's the game plan for Ethereum. Only other scenario I see for Ethereum is it coming up basically to 3,000, just above 3,000 to the 38.2 here. So it comes down, bounces off the 61.8, and then comes up. Instead of here, maybe it'll come up, up here. So either way, this entire area is definitely a sell zone. So this is where I would want to be selling most of my stuff. Even if this bounce right now for the week, if the weekly low is in and you take the Fibonacci from the bottom to the top from this bottom as opposed from this bottom, it's still very, very similar. So to me, the 29.87 is a good enough price to try to take my profits. Okay, so now I'm going to look at ETH BTC, which is also another, I guess you could say, indicator or chart that sort of is indicative of the cryptocurrency altcoin markets. A lot of times when Ethereum starts going down, most alts go down. So you could look at the ETH BTC chart and notice that, along with the ETH chart itself. So it looks to me like the Fibonacci was here, and this was the top of the Fibonacci, and we came all the way down and then popped all the way back up. So first off, let me just see where we came down. So it looks like we popped up and then came all the way down to the 78.6, and then we popped up to what looks to be the 61.8. Okay, well, actually, I take that back. Unless we do the body unless we do the body. The body is the 61.8. So I suppose you could say that we hit it right here, and now we're on our way back down, which is not good. It's not good for the markets. What would have been good? So let's take the fib from here, from the bottom to this top now. Okay. Yeah, you don't get a bounce. You hardly ever get a bounce unless it's super, super bullish. You hardly ever get a bounce from this level. It's normally the 38.2, but what we've been seeing lately is a 61.8, or even going all the way down to the very, very bottom, and then even liquidating everyone who longs the bottom before moving back up. So there's no way that I would be wanting to long here. I'm still really trying to get out of my positions, and so I would not want to long. I would still look for shorts, and I would long down here, possible longing opportunity. I'll say that, possible longing opportunity right there. Otherwise, I would say scalping here. This is where I'll scalp. This is the monthly close, so I'll just change the style. Oops, I don't like that. I'll just change the style to this, I guess. And then the local support is down here. I don't even like the local support. I don't even really like that. Also, if you look at the ETH BTC charts, this is one that I actually plotted out quite a while ago, and it looks like I wanted to, take my profits here and convert my ETH to Bitcoin here. By the way, I'm not in the frame anymore because I turned my camera off. It died, but this honestly doesn't really look that healthy to me. It sort of looks like it's turning over. So I don't know. Maybe it's just my bias, but I could see it coming back down, and I would love to get in back at this support for sure. Convert my Bitcoin back to Ethereum down here for a bounce. And with saying all of that, what I'm going to do now is I'm just going to sign out of this right now, and I'm going to make another video tomorrow just going over all of the different coins and everything else, just pretty much as many coins as I possibly can, so that I can figure out, some game plan, some good game plan. And all I know is that right now, a couple coins that I really like, is Near protocol, because you can see it's been a nice uptrend. I love Ape, so Ape, nice uptrend. And I think Luna has been fairly consistently on an uptrend. So I like the coins that are on uptrends. So I only want to get into coins that are on uptrends. And honestly, I think Ape is the best bet because Ape has the narrative around it. And I'm sure when land sales go, or when land goes on sale in the Ape verse, or whatever you want to call it, this will rocket up. So I'm going to try to build my biggest position in Ape coin. I have orders coming. I have orders going down about another, I want to say 10% in case it drops another 10%. I have a bunch of orders coming all the way down to about $14. Yeah, just about $14 to buy. And that's something that I would like to hold on to. Also, I'm pretty sure Doge, I'm pretty confident that Doge is going to do well with Elon Musk now at the helm of Twitter. So it's a lot of, it's like, I know people don't like it because it's they're dog coins or whatever, but you have to go with the narrative. And this is something I'm really, really trying to push, like, because I actually got screwed over because I put into fundamentally sound plays. It was all fundamentals and it was like all really good, solid projects. And you know what outperformed every single one of them? Dogecoin, the meme coin. You know what? Like all the meme coins like outperformed all of them, like everything. So I just, yeah, even Doge Elon, outperformed everything. So I am definitely going with the narratives now. And that's like my major, like number one thing to think about when thinking about what to buy. And ApeCoin for sure has the biggest narrative around it. Plus it has good TA. So I'm going to end this off here because this has been a long video, and I will pick it up tomorrow, and I'll see you guys tomorrow.